The S&P 500 just capped off its best week since the beginning of July, mostly based off of optimism that a second coronavirus relief bill is getting closer to being done. In this week's video, we'll be going over the returns and the news stories from last week, as well as looking at some historical data of the markets leading up to and right after an election, as well as looking at energy, which is one of the hardest hit sectors of the markets this year and why things aren't looking any better. The S&P 500 last week was up over 3.8% for its best week since the beginning of July and is now up almost 8% for the year. The Dow Jones also had a great week, up over 3%, is now positive for the year and has hit its highest level in over a month. The Nasdaq also had a strong week, up over 4.5%. It's still leading the way as technology's up almost 30% now for the year. And the big story came out of the Russell 2000 as the Russell was up over 6% last week and is now up over 10% over the past 2 weeks. And now the Russell 2000 down about 1.8 for the year, getting closer to break even. As we're shooting this video on Monday morning, the US indexes are continuing their push higher, with the Nasdaq leading the way, opening up on Monday about 1.5% higher. Now, as I mentioned at the beginning, the majority of the returns last week came off of optimism of a second coronavirus stimulus bill being passed soon. Now, the White House increased their offer to $1.8 trillion from their initial offer of $1.6 trillion, but that's still off of the $2.2 trillion already approved offer from the House. But the good news is here that it looks like they're still working on a deal and something may happen sooner than later. The markets also rallied last week off of the hopes of COVID-19 vaccines. Now, companies are expected to have their approvals from the FDA towards the end of November, with estimations of about 80 to 90% effective rate. Now, the sooner that a vaccine can come out, the sooner that most people can get back to work and the economy can get back to normal. Now, to take a look outside of the US, foreign markets were up almost 3% last week, but still down over 5% year to date. And of these 6 indexes that we're tracking, it is the lagger still. Emerging markets were up over 4% last week, now positive for the year after the strong week, up about 2.2% year to date. At the beginning of the video, I said I wanted to go over 2 statistics about what happens in the market leading up to and right after a presidential election. So first off, over the past 75 years, the market's averaged about 0.5% return in the month leading up to a presidential election, but it's actually only been positive half of the time. Now, when you look at the election through the end of the year, the market's been up an average of about 4%, and it's been positive in all but 3 times, which is 83% of the time. Now, the main reason behind this disparity is because the market doesn't like uncertainty. During the months leading up to a presidential election, there's obviously a lot of uncertainty about who the president will be and what their programs may look like. But after it's announced of who the president will be after the election in November, the market gets a better idea of what the economy may look like in the years to come and what the policies may look like as well. But this year may be a little bit different. With mail-in voting and the potential for demanded recounts throughout the United States, we might not know who the president actually will be until the beginning of 2021. So as I mentioned earlier, with the volatility that we see before an election, if we don't know officially who the president is until the beginning of 2021, we may see that volatility continue throughout the end of the year. Now, I want to move on to the worst performing sector of the US markets so far in 2020, and that's energy. And hurricane season, especially Hurricane Delta, continue to batter this sector of the economy. Hurricane Delta has dealt the greatest blow to US offshore Gulf of Mexico energy production in over 15 years. This has halted the majority of the region's oil output and about 2/3 of the natural gas output. Also, it's about 92% of the Gulf's oil output is now shut down, which is the most that we've seen since Hurricane Katrina came through in 2005. It's also important to note that the Gulf Coast houses about 50% of the US's petroleum and natural gas capacity. So as we're shooting this video on Monday, the US markets are continuing their rally up over 1%, and the Nasdaq even is up over 3%. But crude oil, on the other hand, is down about 3%. So it's safe to say that things aren't getting any better for the worst performing sector this year. There are a few things that we're paying attention to this week. First off, on Wednesday, the Fed speaks about their policy and interest rates. On Thursday is jobless and manufacturing data. And Friday is retail sales numbers. It's also the beginning of third quarter earnings season, and the big banks kick it off. So we'll be paying attention to their conference calls and also their earnings just to see if we're continuing to see economic recovery. Thanks for watching our video today, and if you found this information valuable, subscribe to our YouTube channel and follow us on Facebook.